Our next testifiers together are William Gordon, partner in Stac Media, and Pino Luongo, partner of Stac Media and owner of the Morso Restaurant. Welcome. Hi. Oh. A technical timeout.
But that is what enables us to display up there. Okay, that's where we're going to go. And you don't have, oh, great, so just doing this. That's just the need that. You need that? That was it.
What do you need?
I'm concerned that I don't want to lapse this up for the next meeting. So this, okay. I can start.
Why don't you start without? Yes.
That's messed.
Hi.
Hi.
Morning.
Good morning, good afternoon.
Afternoon, actually, it's just noon.
In Sweden, it's evening. I'd like to thank you and your staff for offering us this invitation to participate. I think we have something to add to the program, different from what we've heard so far, remarkably. And as you said, my name is William Gordon. I'm appearing along with Pino Luongo. We are the co-founders of Stac Media. We have invented a methodology for the collection of sales tax, the sales tax portion in real time.
You know, William, if you can bring your microphone a little closer to you.
Okay.
Perhaps. Great. Thank you.
The sales tax, we've got a collection method for the sales tax portion of the transaction in real time that makes use of the existing systems of credit and debit card networks, which have existed for time immemorial so far. I'll take you through the slides then. Pino, other than being a Stac methodology creator, is also a small businessman, as you mentioned. He will discuss the benefits to the small business owner by following this methodology. When questioned about how long it takes sales tax portions of a purchase to get to the state government, most people have no real knowledge. Jane and John Q. Public assume that when they swipe the card and the money is removed from the cardholder's account, it goes directly to the state. Presently, this is not the case. We have found, following many university studies as a matter of fact, that the sales tax portion can get to the state in 30 days, 50 days, 110 days, a year and a half, and sometimes never. Hence the innovation of the Stac methodology. The slides, if we ever get it together here, you'll see describing the remarkable change in how merchants get paid by customers. A few years ago, 10, 12 years ago, about 25% of all retail transactions were using credit and debit cards. According to the U.S. Department of Labor Statistics, 92% of credit and debit cards are now used in transaction-based. This change happened slowly. First, most credit cards were business-driven, and most merchants didn't accept them anyway. In the recent past several years, the use of debit cards that are directly attached to bank accounts have skyrocketed. Studies have shown that young adults are completely eliminating the use of cash. One can observe a majority of the under 30 set buying a cup of coffee with a debit card. Consequently, we have the debit card processors following the Stac methodology in New York State, and therefore Jane and John Q. Public really benefit by this. We could talk a little bit extemporaneously without the slides.
Right.
The dean is coming, who will
Catch us up on the slides.
Okay.
If maybe you could, talk for a while.
And what is it then?
I would just, okay, go ahead.
Because
We're going to do the size.
Okay, my name.
Sorry.
Good afternoon, Senator.
Good afternoon.
My name is Pino Luongo. I've been a restaurant operator in New York for 35 years, mostly in New York City. And right after the events of 9/11, I had certain number of business in Manhattan. And as you know, it was not only the human disaster that took place, but also the economical disaster that followed the 3, 6, 9 months, almost a year thereafter. At that time, having 6 restaurants in Manhattan, and one was actually under the towers, it became clear to us that the business that normally was generating a large amount of revenue a week was not going to be there. So like many operators, you have to make choice. The first choice that I made, it was that maybe all management would take a pay cut, nobody gets fired, and we try to really ride the storms and see how things will improve. But things didn't work out that way. And a year later, we had an issue with the set taxes, which was money that was not available. It was available at the time before 9/11, but it became a money that was used by us to run the business because we thought it was the more important priority, and hoping to recoup this cash later on and pay back to the state. I learned a lot from the experience. It was an awful personal experience. And over the year, I came to the conclusion and asked myself many times, going to bed at night, looking at myself at the mirror, says, why do I have to collect taxes for the states, hold them up for 60, 90, 110 days, and then be responsible for that? But because, the system is designed in a certain way. But then I came to the conclusion that my business was over 95% in credit card. So I started to analyze the processor. The processor are the company that handle the credit card transaction on a daily basis. Those are our bankers. Because if we don't send them everyday batches, tell them, look, we want to collect this money, we have no money because 95% comes from them. That includes set taxes, includes gratuity, includes revenue, and everything else. But as you know, Your Honor, being a small business person, sometimes the business require that with the ups and downs of business, you use what you have to meet payroll on a daily basis, weekly basis, pay your vendor, pay utilities. But because this revenue, I'm sorry for lack of better word, this revenue are commingled. They come together. There is no other way to look at it. You use them with the understanding that maybe when you file the quarterly report, you're going to pay them. Now, here comes the quarterly time, which is already 3 months plus 20 days, 110 days later. And now you have collected, let's say, $35,000 in cash sales. You go, you got the accountant, you pay money. By the way, it costs a lot of money to track the set taxes. And then the accountant says to him, but you know what? You are short $15,000. What are you going to do? Those are the choice used by the small business, as far as what I noticed in the industry so far. Report the amount due, but underpaid. Report the amount that you have available, you already committed a crime because you're underreporting. No reporting at all. With the hope that the audit would not come that soon or that quick, and that when the following year you file your income tax return, you still have the opportunity to correct your set tax reporting for the prior 3 or 4 quarters. Your Honor, this is a reality that it needs to be resolved because small business does not have access to bank loan. We are not going to have access to conventional financing. In case of necessity, the only financing that we have comes from set taxes revenue. So I am totally in favor of the fact that if at the end of the day, when I batch all the transactions collected in credit cards and debit cards, which is 95% of my revenue. The processor absolutely can, the technology is there today, separates the sales tax revenue from my revenue. Bifurcation, split them. The POS can do it, and every form of credit card readers can do it. And at that time, the processor sent the money directly to the state. So when it comes the time to reporting, I'm reporting what I already gave to the state, so I feel much better because, hey, I already paid in advance. You might owe me some money back, who knows? But I know that I don't have to face a huge liability because this money has been given to me as a trust fund, which honestly I would like to do without it. Now, how I came to this conclusion is that I heard here talking about, it's going on for a while, zappers, the emeritus professors explain very well the VAT system in Europe and everywhere else. But at the end of the day, I think they all exist for one fundamental reason: money. The state wants to collect this money, and what we develop with this patent is the ability for the state on a daily basis, on a transaction basis, because soon transaction will happen on a split second, to collect the revenue generated through the merchants in sales taxes. We are not looking into changing the reporting system, the filing system. We just look at the cash. And the cash that can be submitted directly to the states is very beneficial to the small business. Now, you're going to ask me, why are you talking like this? Many small businesses pay their taxes on time and they do everything on time. Yes, it's true. But if that's true, why there is almost established a 20% shrinkage in sales tax revenue in the state of New York? Mm-hmm. One. Two, you're going to hear a lot of opposition by the big retailer. Yeah, probably if I were in their position, I would be against it myself. Why? Because they're getting free loans. They collect daily hundreds of millions of dollars. They keep it for 30 days, sometimes longer, because you can play with the accounting any way you want. And what you get? You get that the merchants, the large retailer, they got hundreds of millions of dollars, free of any interest, that helps their flow, helps their cash flow on a monthly basis. And on the other hand, the states have to borrow money to just meet its own expense. So all of these logics behind what I just mentioned to you are the reason why I started to develop this patent. And the patent was approved by the patent office in Washington, the first generation. We already have 4 patents that we are pursuing. And basically, our goal is to make clear that the player that the states needs to look at are the credit card processing company, which handle trillions and trillions of dollars every year, and which they will act on behalf of the states only through mandate.
And it's maybe a perfect transition now back to your partner, and I think the equipment is now working for you to make your presentation. Thank you.
If this gets too boring, just wave. This idea came, Pino putting several things together years ago, but it really started in the late 90s with the publication of a book, which really relied on a lot of university information. University of Tennessee and William and Mary were very central points for this kind of stuff. And they basically came to the conclusion it's available in
this slide.
well, I'm going to, oh, right. Didn't come up. Didn't follow. Got the first one, that's it. Uh-oh. Technical. I changed the slide here and it didn't move.
Sorry?
It doesn't change the slide.
The second page.
I-
Let's start to wing it a little bit.
Yeah, because
It's over time.
I do not believe that I'm going to be able to,
Inevitably, real-time, this is 1997, real-time sales tax collection has been acknowledged by national experts for years. Yet, virtually all commerce is transacted electronically, and there is no technical reason why sales tax cannot be transferred directly to the tax agency at the close of the transaction. There'll be all sorts of barriers, that political and otherwise, but none of them will be technical. It will happen in our lifetimes, and the cash flow implications of the state ultimately make it happen. When electronic commerce is ubiquitous, the logic and the dollars of real-time sales tax payment will become reality. And one of the things in commenting on the professor's testimony is once you have the money, you're back into the data. It's very obvious. And people who are going to fudge on the data, or on the money, are not going to go back to the state and say, hey, I overpaid. You won't see them if they're fudging. In reality, if there's a mistake, they will make it. But they'll, anyway, let me continue. Again,
I'm not going to.
okay.
Okay. So,
Antiquated sales tax systems have led directly to the loss of millions of dollars for states and local governments. Non-compliance resulting in significant sales revenue leakage. I think the professor also looked at this $1.7 billion in leakage. And I think that's mostly using of this common term, which Pino referred to as zappers. And that's a very big statement. We met with District Attorney Vance's office about 6 months or 7 months ago, and he's well into finding these things. And what the Stac methodology does is it stops it before zapping is possible. In other words, as Pino pointed out, if you're going to get your money, you have to file it with the processor. So everything gets filed. Otherwise, you're not getting money back. If you reduce that level of income at filing, you're not going to get the money. So it's obvious. Here's our controlling agent. It's not an arbitrary filing of taxes anymore. It's definitive on 92% of income. So you got a big chunk of money in there. Florida estimates their gap at about $2 billion at this point. And in some concerns, the retail market, only about half of the sales are reported. That's reported. That's with the zapper. But we eliminate that because they have to collect their money in the first place. So we know about it right away. The data is very clear. Slow remittance of sales tax cash collected materially negatively impacts the state and local cash generation and cost of doing business. This reduces millions of dollars of interest float, which is a big thorn in big box retail. For 2 or 3 days worth of float, they would generate millions of dollars right to the bottom line. They don't want to give it up. They just don't. And we've been in jurisdictions like the state of Texas, and the actual legislator who proposed it, they came to sales tax very late, about 10 or 15 years ago. And now he said, he sold it to the retailers, but I said, oh, you'll get the 30-day float. And now he's going back to them saying, you're not going to get the 30-day float anymore. There's some considerable pushback. It increases debt burden cost as more borrowing is required to satisfy operating cash flow on the state. The unnecessary burdens is a big deal for the small businessman. State-imposed sanctions on businesses are unnecessarily burdensome for the merchant. The system of forced requirements that are structured in a way that encourages small and mid-sized merchants to become delinquent, as Pino is referencing, having experienced it. What is Stac? And we get to what we do. It stands for Sales Tax Automatic Collection. It's a patented and only sales tax payment methodology that would enable collection of sales tax from credit and debit cards in real time. Stac methodology, there are a ton of operations out there in the United States, not in Sweden or any part of the world, but in the United States that get in the middle of the sales tax process. They offer their sales tax tables for various areas that charge different rates. They provide it. Some take the money and they file it for the client, but others, especially in the online business, it's huge. And they work very closely with those organizations, so they're filing the proper taxes. It's good, but it's only 10% of the whole business. So it's, and New York has legislation that controls that anyway, so it's sort of kind of unrealistic here. Stac methodology uses existing payment systems and technology and infrastructure to create an easy vehicle to remit daily credit and debit sales taxes. Stac methodology will require no change to the current tax filing processes. It just follows exactly what the law. This is a collection device. It's like when we went from cash to checks. So this is now checks to digital. And there are pictures of the various ways that people collect it now. And there's a picture of the Verifone device. Verifone is a manufacturer of those little swipers you see next to a cash register. They're a huge vendor. They're about 75% of the industry. And they actually have a picture of saying, declare your sales tax, otherwise we're not going to process it. These processors now have the ability remotely, when you turn it on the first time, you start having to do this. They will reprogram that device before they can run a transaction, and it will automatically figure the sales tax. We also have a little cute cartoon graphic which shows where the money goes and how it gets to the state. We have a receipt from Publix in Florida that shows the various taxing levels of lettuce as compared to a plate in a supermarket. What's taxed, what isn't taxed. And it lays it out. And that's what they send to their head office every day. And if it's a business-to-business card, it's been sent like that for years. We have graphs of they're kind of old in data, but they show a huge amount of leakage in the various larger than New York. New York does it better now, but not as, California is awful. Texas is awful. New York is pretty good, but it's still in the billions. They're in the tens of billions, and New York's in the billions. Implementing Stac methodology would benefit states and localities. It would be another tool in controlling and target new borrowing to keep debt service affordable and ensuring that the state abides by its debt limit. That would be nice. Implementing Stac methodology would improve cash flow position by using existing technology to collect sales tax in real time. Implementing Stac real time is a big thing, not with us, but with the industry itself. As Pino alluded to, it's going to be transactional based in about 3 years. Swipe the card, the transaction goes for processing immediately. They were talking about 4 to 5 times a day. It may be automatic, and you just, at the end of the day, it's in your bank. They want to get rid of it also. Just a side comment, when we appeared before the Budget Committee in New York State last year, a processor heard about us from Cleveland, a very large in the business, and he said, can I come in? I want to talk. I said, sure. So he flew in from Cleveland on his own expense, and he told the budget director about how restaurants were moving away from having that $4,000, $5,000, $6,000, $7,000, $10,000 fee the 10th of the month, of the following month. They want to spread it out. So he was talking about taking transaction fees and making them daily. I know, now does that on purpose. He pushed his processor in that he gets billed daily. So he doesn't look at this big dump of money that's the next month. In restaurants and small business, nobody budgets. It's your hair's on fire when we need cash. So that's what it does for them. It evens the number. He's making money, but it goes out faster as he, anyway. It would reduce sales tax non-compliance by automating the cash collection process. That's really the heart of the issue. There's no volunteering. You can't say, I only have $12,000 this month when you have to have $12,000. It does it for you. Now, again, it does not address in any way, shape, manner, or form with lottery tickets and little games at the end of it to get cash transacted. That is always going to be. But as it's shrunk so much, it's gone, completely reversed the numbers. If you can get the credit cards, you get 100% of the credit and debit card sales tax, you're way ahead of the game at this point. Current sales tax system, as we have pointed out, are broken. They're antiquated. It goes back to the 30s, some of this legislation. Others in the early 50s, but whatever it is, it's 50 years old at the youngest. Impose staggering unnecessary burdens, which I mentioned. They're structured in a way that essentially encourages small business and mid-retail business to become delinquent. After the fact, enforcement does little to prevent non-compliance and is often too much and too late. The audit factor. Again, we've met with people who are now out of government talking about how the state of New York does this. It's done with shiny beads and flashes of brilliance, and it doesn't really make any sense. That they collect every nickel of sales tax at the end of a period is just fantasy. It's just not true. The increase in prevalence of tax and amnesties over the past decade, I think you would you asked that question before, have shown to encourage sales taxpayers to wait for the next amnesty rather than perpetually engage in a voluntary compliance with the revenue system. And that's great. You go, yeah, they're going to make this declaration, happy to do it 5 years after they owe the tax, and they're happy, the government thinks they're happy, and they're not. They're just creating this false sense of happiness. Background overview. States are focused on continuing to apply discipline and best practices to improve the budget and financial conditions of the state and its localities. Everybody runs out of money. States and localities could benefit by gaining significant incremental ongoing revenue without raising tax rates. I read an article about suggestions on how to get more taxes, and it was grouping more businesses in it, or rather than raising them, because that sounds terrible when you raise taxes, but all of a sudden they want to tax architects. They want to do this, that, and the other thing. Connecticut is talking about taxing the endowments from Yale, okay, on sales tax. Pick up $25 billion, we want 6% of that per year. Good idea. The improving sales tax collection effectiveness to reduce the sales tax leakage, as we discussed, to underreporting, evasion, errors, and business bankruptcies. Increasing data reporting capabilities to mitigate better overall revenue, collection risks through improved auditing and performance analysis. Sales tax automated collection methodology would enable states to maximize the benefit by moving its sales collection into the 21st century through leveraging existing technology. And it's just basically good government.
Thank you. And I'm sorry that we couldn't show the slides.
Me too.
I've actually had a chance to meet with you before, so I've seen the slides. I want to thank you both. Just to highlight a couple of your points. One, you raised the concern that I suspect we may hear from some businesses, but I think you're probably right. It will be the larger businesses versus the smaller businesses that right now, they quote unquote hold on to this, they collect the sales tax at point of sale, but then they have 90 days to 110 days to actually pay the taxes. So that does, I know you're an accountant, that gives them an opportunity for the float, as we say, to earn some money off of that. And with an automatic daily payment into the state, they've lost that ability to earn money off of the collected sales tax. What's your response when, what do you think the state's response should be to that?
Are they deserving a small interest loan with no, to the small business interest loan, to take the money that should be yours and mine as state residents in New York and loan it to people who need it to run their businesses or want to run their business that way? The answer is that doesn't make sense. If you want to identify a pocket of indigent businesses that need help, take the money in, put the money out. It's not everybody makes their own loan, and that's the problem. And it's not just in the small business level. We had Pino and I have been in this 5 or 6 years, and the big box retailers came at us throwing darts because we looked at some of the balance sheets, and a couple of these huge retail companies made no money for 4 years. And then you sneak in and then you start to look, oh, they had fees. It was the borrowing. They deny it, but it's there. And whether they loan it for a day or an hour, it's coming back. And they make no money on their businesses. I mean, you're talking about hundreds of millions of dollars in interest. That is the state's money. It's the state's money as soon as the transaction happens. And I think if you read the statute very clearly in the state of New York, you're not supposed to commingle this money. You're supposed to put it in another bank account. Now,
Doesn't trust fund.
Anyway, nobody does it, nobody enforces it. There have been ideas to create escrow accounts, that you deposit your money to an escrow account. And they did that, which was nice. The state of New York invented that about 7 or 8 years ago. When they went to collect the money, they found that the IRS and Child Services had swept the accounts already. Gone. So it's not practical. Also, it's kind of not practical to manage 400,000 or 500,000 escrow accounts by an agency in the state. You're probably eating up most of that profit at that point. There are nuances all over the place here on why they don't. The state, again, in one of our interviews with the budget people, they indicated that big box people do what they're told to do. They were concerned about the small business people, and they wanted to know exactly what Pino's talking about. Here it is. I would say, on speaking to, it's a very bad survey number, but 150, 200 different small businesses. About 10% realize, oh my God, the float is gone. The other people say, gee, I get rid of that day when I have to, instead, and the state of New York, by the way, is ready to do this because there's a line when you file your taxes, it says prepaid. So I prepaid $10,000, I took $1,000 in cash in, I owe $80, here it is, we're done. Boy, does that make them feel good.
And I appreciate very much Pino's describing the situation as a small businessman and a restaurateur, that when we met and we talked about this, it did make total sense to me that knowing that you're making your payments daily and that while you don't have that extra cash, so to speak, in your pocket for 90 days, you also know that you're not going to hit the end of that period having already spent that money on something else. You're going to know that your taxes are paid. You're not going to end up in the traumatic situation of going, do I need to break the law this cycle?
Senator, it's a line item that we, in our small business P&L, we call hope. Hope to have this money at the end of the 3 months. And the reality is that it's just the nature of the way the money is collected that creates the problem. If you have plenty cash flow or a good cash overdraft on the bank, you don't worry about that. But if you don't, as a small business, that $1,000 a day, more or less, that goes through your tips, your cost of goods, is in the bank, is there. So I'm looking at my balance today. What's the payroll release today? The taxes are $3,000, payroll $12,000. How much you have? $20,000, $15,000. Release everything. Now, the moment that my motto is very simple. If I don't have it, I don't spend it, and that goes for many, many different operators. I would like to put smaller operators in charge of large companies, see how things will run much better because they know how to run the cash. But for give you an example, he wants to be very politically correct. I'm not. And when we were dealing with the National Council of State Legislators in Alaska, we were challenged by a gentleman for J.C. Penney, which he says that, number one, the technology doesn't exist. The technology exists. If you have a POS system, you have a card readers, and you need to have a processor, the technology is there. Well, what we want to introduce. But then I look at him and said, what's the other problem? But there is no issue of cash flow. What are you talking about cash flow? I said, but let's look at your last 4 quarters balance sheet. On every quarter, you're $100 million in red. Don't tell me that you don't use the set taxes to really square your balance sheets for at least a quarter to move forward. And of course, I was attacked by him and everybody else, but that's reality. At the end of the day, yeah, you can have data, that you can have a good auditing, but where I come from, money talks. And I think it's better for our community of restaurateurs, and for the retailer, and most important for the state, that this money, the state takes responsibility to collect it every day, because today the technology is there to do it.
Thank you both very much
Thank
for your
you.
testimony today. Appreciate it.